Alright. Hey, what's up, guys? Hello, hello, hello. We're gonna wait another couple seconds here before we begin. But in the meantime, I do want to have a little announcement here for the channel. We have surpassed officially 1.1 subscribers, and we're well on our way to 2,000 subscribers on the channel. So that's a pretty amazing statistic to see on this channel. So thank you guys for all the support, you know, for hitting the subscribe button, for hitting the like button, especially for commenting. But yeah, I mean, we're really well on our way until we hit our next target goal of 2,000. I think that'll be my end year goal here at this point, as we have reached the midpoint of this year. So yeah, so that's kind of the big announcement that I want to share with you guys, and you guys can probably see it right there on your phones or your laptops. That you can see it's at let's see, 1.2 now. Yeah, almost 1.2, right? Okay, so we are going to go over tonight. I'm gonna bring the music down a little bit. Okay, I think we're still okay with the audio. Let me bring my mic a little bit closer. All right. Okay. All right. Okay. So, I just saw some news from Bloomberg saying that. Let's see. What does it say here? Oh, the U.S. is proposing tariffs of at least 10% on imports from most major trading partners following a probe into forced labor. Okay, well, that's probably not a good sign. Obviously, forced labor is not good too, but I don't think tariffs is the way to do this because, first of all, they're going to put a tariff of at least 10% on imports. Well, that's interesting because if you guys didn't know, if the dollar falls, which it will fall during this administration's reign in the U.S., imports will get more expensive. So yeah, you guys can see where I'm going with that. All right, let's see. Yeah, that's the only news I see. Major news right now. I do know earlier that there were some missiles flying towards American bases again in the Middle East, and that's kind of what allowed SPY to drop a lot. Well, quite quickly after hours, but then it rallied right back. So it seems like the markets really just don't want to worry too much about what's happening in the Middle East anymore, even though the Strait of Hormuz has been closed, right? And the implications of that are still going to spread worldwide, and it's still going to affect us as well in the near-term future. I mean, it's probably going to be realized in the markets, but sometime in the summer, at least by Q3 as well too. So okay, all right. So yeah, okay. Looks like seems like there's gonna be more talks of these tariffs again, which is not good. And again, U.S. dollar will continue to fall in this administration during this administration's reign. If you take a look at the DXY, right, it's been consolidating nicely, but it has been falling for some time now, and ever since 2025 began, it's been a very steep fall. And we're at you know, multi-year lows here, and there's a good chance that we see another big move lower. And as the dollar falls, again, U.S. exported goods become less expensive to export to other countries, while imports can become a lot more expensive on top of imposing these import tariffs. Okay, so again, this is kind of a double whammy here. So again, it's overall not a good thing. But yeah, those are the two kind of recent news that I've seen so far on Bloomberg here. So okay, so let's talk about what we want to talk about tonight. Okay, so today we're gonna go over specifically, we're gonna go over, well, as it says on the title here, which software stocks to buy. Right now on my thumbnail, as you guys see, I said it's not obvious yet. Okay, And here's the reason. All right, so here's the big answer that I'm trying to go over with you guys tonight. All right, so software has moved up a bit too quickly here. And if you guys didn't know, the ticker that most people use for software is IGV. This is the iShares Tech Software Sector ETF, or some people like to use CLOU. This is specifically the cloud computing ETF. Okay, so they kind of act in the same way, but obviously there's a different basket of names that are in each ETF. But IGV is kind of the broader ETF to be looking at for the entire sector. Okay, obviously I played this one personally. Once it was over $89, it just shot right over to both of my targets here, 100 and 107.50. Unfortunately, I was not able to hold until 107.50, but thankfully I was holding Microsoft, which is again a leading software ticker and company, so I was able to capture all of these gains essentially. Right? But I just wish I was able to hold IGV until it hit 107.50. I ultimately took profits right a little over 100. I think it's like 100 like 52-ish is what I remember when I took profits there. But yeah, so what I'm trying to describe to you guys is that I mentioned this to my members last week, to my readers of the CFO Report and the private CFO Discord community. If you guys want to know what that is, just take a look at the description box down below. I have my link there. It's the second link. It's very hard to miss. Click on it and you guys will be able to see all the information that you want to know about the CFO Report and joining the CFO Discord community. Okay, so now what I've told them is that this IGV rally has been so far a little bit underwhelming, to be honest, right? Because when you take a look at the overall entire tech sector, right, QQQ, let's take a look at NASDAQ, right? NASDAQ has been making all-time highs consistently, right, every single day, right? And most of this rally has been led, well, I should at this point say almost all of this rally has been led by semiconductors. All right, and if you guys were looking at my screen here before we officially began the stream, I was taking a look at SMH over IGV, and you can clearly tell that semiconductors have been clearly leading this entire rally since this year began, and it began right over around here, right? And so this entire rally. Now, if you take a look at the opposite side, IGV over SMH, you know, well, software has been severely lagging compared to semiconductors, and again, this rally just seems like it almost feels like it's been forced, right? Where people are saying, okay, I think semiconductors have run enough. I'm gonna sell my winners, right? Whether it's photonics names, memory names, right? Photonics or memory. They're gonna take out a majority of their positions in those specific tickers and rotate it into the tech software sector. And so I truly believe that's what's occurring right now, because the fact that we've just gone up way too quickly. And you might be thinking, wait a second, Andrew, why is that a bad thing? All right, well, isn't it great that people are able to capitalize on such a massive move? Of course. But what tends to happen when people see that a position has gone up very, very quickly, guys? What tends to happen? Can anyone answer that for me? Anyone? It's a very simple answer. Anyone? The live chat room is open, so anyone? That'd be nice to do nothing. Yes, they sell. of course, right? If you see that your position's up over triple-digit percentage, right, in gains, you want to sell, and that's exactly what has been occurring in the overall software sector, as this internal rotation has been occurring between semiconductors and software. And that's the reason why I believe that I don't think it's that obvious yet that we should be buying software stocks. Yes, there are leaders, which we will go over in a couple of minutes here, but the general perspective that you guys should be holding so far right now is that semiconductors will continue to lead the rally, unfortunately. All right, this wasn't a perspective that I've had about 2 months ago, but after this massive rally, I mean, this is a pretty big rally, very quick one as well. It's leading me to believe that this is way too quick, and it just feels like a bunch of people just wanted software to rally because the fact that this subgroup within the tech sector was just not feeling the love, right? And the overall sentiment has been absolutely put to the ground, right? And semiconductors continue to, the semis, right? The semis group just continue to outperform every single other internal subgroup in the tech sector. Does that make sense? Hopefully that makes sense. Okay, now one other thing, okay? Let's see here. What was I trying to say here? Yeah, so again, if any of my readers, CFO readers, or members are watching now, there's a reason why I was talking about mean reversions, right, in the software group. And well, that's exactly what we've got, right? Because mean reversions are supposed to be quick, and they're not supposed to give you a structural change in the overall long-term bigger picture trend, right? Mean reversions are supposed to be quick, right? They mean revert back to the norm or back to a specific level that was maybe been used by sellers, that was the official break level to the downside, where a bunch of selling began and the official downtrend began, right? So for example, IGV reached 107.50, and that was kind of the area or the level that sellers gained they garnered a lot of momentum actually, and a lot of volume, and they just continued to smack the price back down every single time price began to approach 107.50, and that happened over here, right? And that's where we got our waterfall moment, as sellers just piled into this level or this overall general area and continued to pound it back down lower and lower and lower. And obviously that overall AI trade is essentially what caused software to see a lot of repricing with decreasing market valuations across the entire subgroup of the software sector in the overall tech sector. Okay, that was a lot of words there, a lot of jargon. So hopefully you guys understood me. So again, it mostly felt like we were looking at a mean reversion. Again, I treated them as such when we were looking at Microsoft and other software tickers like NOW, right? ServiceNow, that's another ticker that we traded in the CFO Discord community. So again, if that is indeed true, everything that I've just stated right now, where seems like they were just basically, it was like a I feel sorry for software rally, right? So quote unquote, I feel sorry for the software sector, so we need to make sure it rallies. That's essentially what it felt like. And this rotation wasn't really a rotation, a structural rotation, but more of a mean reversion, almost like an oversold bounce. All right, that's a better analogy there. Does that make sense? All right, so that's kind of the reasons why today we actually saw a massive move down in software compared to, well, if you take a look at semiconductors, look at what happened. New all-time highs again. I mean, this is absolutely amazing, right? And when this occurred, when SMH had a nice gap up open, IGV had a gap down open, and it continued to move lower in the early morning. But if you take a look at Microsoft, right, one of the leading software tickers and one of the leading cloud names, absolutely pounded back to the downside. I mean, just take a look at the 4-hour time frame or just the 2-hour time frame, right? This doesn't look not that nice, right? So yeah, sure, it might just be coming back down to revisit the previous breakout level or the initial breakout level. But what did I just say, guys? If we were just seeing, if we are just seeing a mean reversion, or just not even an actual structural change to the actual long-term trend of software, right, of the entire software group, we shouldn't be seeing a very quick gap down and a very quick move lower, right? And also a very quick move back up higher, right? Or the initial breakout higher. We should be seeing a pretty slow, not slow, but a little bit more of a structured move to the upside, not seeing massive gap ups and rips up higher for the entire trading day, and the next day it gaps up again. We shouldn't be seeing such unhealthy type of price action. Is that making all sense now? Alright, are you guys understanding me there? Hopefully, maybe. You guys can let me know in the chat. Okay, yeah, I see you guys' reactions. Okay, so again, I have to see if software decides to actually consolidate rather than continuously pulling back, but it wasn't a good look today at the close for both Microsoft, which is again a leading cloud and software ticker, and for IGV as well, even though IGV tried to make an inside day when I was looking at it during market open, but ultimately it made a lower low. Obviously, it's only a few cents off, right? Today's low was 102.96, and yesterday's low was 102.95. Well, yeah, only 1 cent difference, but the gap down, right? The gap down while semiconductors, SMH, right, had a nice big gap up and continued to move up higher with, again, a new all-time high price print. So yeah, something's a little bit shady here, and I don't think I will be looking to try to force myself to think that there has been a complete structural change, and the fact that we'll be seeing a complete sector rotation, internal at that, right? Internal sector rotation within the overall tech sector group from semiconductors to software. Okay, and that's the reason why I've titled this, right? Which software stock should we buy? And then my thumbnail kind of answers that question by saying, no, it's not obvious yet, right? Because yes, there are leading software tickers out there. There are leading software and cloud names, right? So even cybersecurity, you guys can add in cybersecurity stocks if you want, that have been leading and charging back up higher, right? But it's gonna be hard to try to trust which ones will be joining in on the overall market, well, specifically market tech rally, right? Or even more specifically, the semiconductor rally, right? So there are several tickers that I have outlined for my CFO Single Watch report readers last year that I said would actually benefit from this overall AI revolution. And the first ticker is TWLO. And I actually looked at this one, well, not looked at this one. This was the first ticker in this week's CFO Single Watch reports MM list or momentum mentions list, okay? And look at how it performed yesterday and today. So clear divergence from the price action that we saw from Microsoft and TWLO, right? I mean, this is completely different, right? Yes, Microsoft has. So before I give you guys the overall outlook with TWLO, okay? You guys might be wondering, wait a second. So why are you telling me that TWLO is able to integrate itself as a company during this entire AI revolution better than Microsoft, right? Because guess who has more money? Guess who has more cash to spend, cash to burn, cash for R&D? Microsoft, right? But that's the problem. This is what the markets are essentially telling us, traders. It's pricing in the fear that these companies do have a lot of money, but they're uncontrollably spending this amount of money because they believe, which again, they're not just believing, right? That the fundamentals, right? The numbers in their earnings reports, the 10Qs, right? 10Ks, right? It just shows that, you know, that they are able to spend this amount of money. However, as we dig further in, right, there could be some problems, right? Especially when it comes to the circle of money that's being passed around within the big mega cap companies like Microsoft, Nvidia, right, Meta, etc. Right? I don't want to go over that. I mean, it's a very simple Google search. You guys can see what's going on there, right? It's a very simple, not really simple, but there is a very convoluted way that these companies are essentially recycling their own money and giving it to another company, and that company gives it back as well, in a circle motion, or in a circular shape. So you know, yes, they have the capex, right? The capex is it shows that they're spending a lot and investing a lot of money into making this AI revolution correct, and again, it ensures that they are positioned well for what's to come next in this very fast-paced technological revolution that is the AI revolution. However, that CapEx number, the capital expenditures number, continues to go up higher, right? And markets aren't pricing in that in a positive light. That makes sense, right? Because how much more can these mega cap companies spend, right, in order for them to be quote unquote well positioned? because we see companies, smaller companies at that, than Microsoft, right, doing a lot better, right? I mean, just take a look at the share price, right? The markets are saying, hey, based on their most recent quarterly earnings reports in the last 2 to 3 reports, they're absolutely using AI to their advantage, and they're doing extremely well without CapEx increases, right? Without massive CapEx increases, or without massive taking in of debt, right? Leverage debt. They're not leveraging debt to grow the company even more. They're efficiently growing the company through AI, right? And TWLO has been one of those companies that we highlighted last year that, hey, this company will most definitely do extremely well and will actually benefit from this AI revolution. And so, again, this is the reason why I looked at this on Sunday night and put it in the CFO report, and what a massive turnout, right? Massive breakout. And today, again, clear difference between Microsoft and TWLO, right? We have, just take a look at the daily candlesticks, right? I mean, this is very self-explanatory. And what I've just explained to you guys about the entire spiel with Microsoft's total spending and debt increases and etc., right, compared to TWLO, clearly tells you that, hey, there is a certain ticker here out of these two that is stronger and has a stronger potential narrative when it comes to adapting to AI and using AI to their benefit, right? A lot more efficiently without spending a lot of their cash or burning a lot of their cash, which is very important now at this later stages of the early innings of the AI revolution. Okay, now the next ticker is DDOG. So they have been absolutely smashing it as they've integrated AI with their sales techniques, right? And with especially with their in-house software, and they've been able to grow revenue extremely well using AI in a very efficient manner without burning a lot of cash. Again, you guys can kind of see the pattern here, right? And so DDOG was a very big favorite of mine for for a while. I mean, you guys can see all the way back here, right? Even back in 2020 as well. Okay, so massive breakout here, right? And the other tickers are MDB as well, or MangoDB. So MangoDB had a massive turnout. Initially, in the earnings reaction, it wasn't that great. However, huge day yesterday, right? As people began to realize that, hey, MangoDB is starting to see some benefits from using AI as well. So this is yet another software ticker that has incredible efficiency when it comes to the usages and integration of AI. Okay, so actually MDB here is looking pretty nice. Yeah, I mean, look at this massive wedge here. Huge base, multi-year base that spans about 5 years or so, 4.5 years maybe. All right, so hey, very quick idea. Okay, this is from a long time ago, so don't mind that one. So yeah, so well, actually, this it is pretty relevant here, because this 340 level was a huge multi-year level here. Yeah, it was a level of support and a level of resistance multiple times, and so once we're able to break over it this week on Monday, immediate rush higher, and it continued to absorb all the overhead supply. And so once it's able to retest this massive descending trend line, there's a good chance that we'll be able to see probably maybe 500s, maybe revisit the 500s here as it decides to break out, if it decides to break out. But again, these are tickers, software tickers, that the markets are pricing in and saying that, hey, I think these software tickers need a complete reprice, right? Repricing moment where AI is definitely going to continue to help them out rather than causing them havoc, right? And causing them to spend a lot of money. And these three tickers have been doing extremely well and not doing that. Okay, now the last ticker here, right, I've also mentioned this as well, Frog. Okay, now there are a lot of other software tickers that I want to go over tonight, but again, that's reserved for my CFO Swing and Watch Report readers. And obviously, if you are a reader, you will get automatic access to the private CFO Discord chat room. So all the members in there will also know which other tickers that I have that I'm looking for when looking exactly at software tickers that will benefit the most from usages and integrations with AI. Is all this making sense, and are you guys keeping up so far? Okay, perfect. Perfect. Okay, so yeah, I mean, based on my overall bigger picture perspective and on the actual subgroups of software and semiconductors, combined with what I've just said about specific tickers that are actually benefiting compared to the tickers that may not be benefiting as much right now because things are kind of in the gray area, depending on how much they're spending and how much they're going to be seeing in return based on that spending, right? Again, hint, Microsoft is a big clue. It's all a matter of, right, who will be the AI beneficiary. I've stated this multiple times last year. Right, if you guys remember, if you guys have been following me since late last year, or just last year actually, I said that tech sector, in the entire tech sector, is going to be all about who will win using AI and who will benefit from integrating AI compared to who will be completely left behind because they don't know how to efficiently integrate AI into their business operations, right? So I think it's gotten pretty interesting here, that this kind of divergence between individual tickers that have been big beneficiaries of AI integration compared to the tickers that really haven't figured out how to use AI efficiently, which is kind of amazing because again, Microsoft is a leading software ticker, a leading name. It's one of the Mag 7 names, right? Magnificent 7 names, and the markets are still being a little bit skeptical as to how they're using their money because the capex on AI continues to go up, along with worries of debt, right? How are they going to pay back their debt when the amount that they're investing, right, and they're using and expending on AI itself is not returning back twofold or threefold, right? There's not great returns yet, but companies will continue to spend to ultimately achieve that goal. So again, the markets are looking for, just between two groups, beneficiaries and losers. And I'm not saying Microsoft is a loser, right? I'm not saying that. But when leading names like Microsoft is reacting like this, while the overall individual other tickers, software tickers that are smaller than Microsoft are behaving extremely well, it makes you think, right? It makes you think. And also, it really also makes you think that compared to IGV and SMH, right? Currently, I think we're not seeing a structural change in trend. It's just a simple mean reversion where everyone just thinks that, hey, you know, it just makes sense that that software just needed a little bit of a bump back up higher, right? We feel bad, right? And semiconductors have gone up enough here, so why not and give software a chance? Like, that's literally what it feels like, right? Sentiment-wise. But from an actual technical analysis perspective, that's exactly what it feels like too, right? Because we've gone up straight up in 3 days, right? I mean, if I just start from, let's just say 95, roughly here, right? To 107.50, right? This is over almost 14% run in 3 days. That's insane, right? And obviously I was in from 89, I would say around like 90. That's where I entered with my calls. Okay, so this was a very big gain here, right? From where I've entered, obviously I didn't exit at 107.50 as I've stated earlier in the stream, but if I were to hold this, right, I mean, that's insane, right? In just 10 candlesticks, 10 days, 10 trading days here, you would have been up almost 20% here. So again, there really isn't a massive structural change unless I start to see IGV actually, right? Actually consolidating. And I would say it'll get pretty volatile here if we're able to stay in between 100 to 107.50. Again, that's a massive range, right? It's a 7.50 range, okay? But if we're able to see something like this, right? Something ideal like this, where we don't break below this triple digit share price any longer, and we continue to hold and uphold my daily 10 and daily 21 SMAs right here, right? Red line and my light blue line respectively. And then obviously hold and stay away from and stray away from this daily 200 SMA that we just broke over and reclaimed. Right, there's a lot of different factors that we need to account for when we are looking for a potential structural change for IGV or the overall software sector. Is all this making sense? Okay, so again, a decisive consolidation phase with the price upholding the daily 200 SMA here on IGV will tell me that, hey, this is not just a mean reversion. This is not just a quote-unquote oversold bounce, right? Or just something. It's just something that traders wanted to see happen, right? It's not just being pumped by momentum traders. It's not just being pumped by other Discord groups, right? This is an actual entrenched, right, structural change in overall internal rotation from semiconductors to software, right? If we're able to uphold all these major factors that I've just outlined, right? So again, unless that does happen, right, which I don't think is going to happen just yet, semiconductors will continue to outperform. Does that make sense? Okay, and that's the reason why I am watching this ratio, right? SMH over IGV and the other way around, right? So this clearly tells you that semiconductors have really just pivoted off really quickly here. Amazing. But IGV, right? IGV over SMH, this ratio, not looking too good, right? I really don't like how it's already starting to immediately reject off of the recent highs that it made on this ratio and is now moving lower, right? So it's something has to change, right? If these ratios start to show me something different and suggesting that there is going to be a structural change, then I will most likely go back into IGV and Microsoft as well. Obviously, I take profits on this one. I traded this perfectly. I take profits on this day. So yesterday, okay? So absolutely amazing. Okay? So that is my stream for tonight, guys. I really want to give you guys this quick, well, it's not really quick. It's been, let's see, almost 35 minutes. But I really want to give you guys this outlook on software stocks because I've been seeing a lot of social media chatter as to, you know, whether it's people trying to pump up stocks like NOW, right now servers, or even CRM, right, Salesforce, which I think Salesforce is still one of the losers in AI. I've told you guys this last year as well, and it has been a major loser if you guys haven't seen, okay? But obviously a tradable name, right? This had a nice mean reversion like breakout. Unfortunately, it did not reach its own respective daily 200 SMA like what we saw with IGV or the entire sector there, right? But anyways, I just think that if you guys are trying to find which software stocks are really doing good, right? Look at the 4 tickers that I've just shown you guys, right? TWLO, okay? TWLO, DDOG, right? I have been following these names really well for quite a long time. So trust me when I tell you guys that these are the tickers that you guys should be looking out for when looking for AI beneficiaries within the software sector, okay? Frog, okay, and MDB. Okay, MDB is kind of wishy-washy because their earnings were kind of the expectations on MDB wasn't really met when it was I believe the revenue guidance, if I'm not mistaken. I'm pretty sure it's the revenue or the earnings guidance. But anyways, yeah. So these 4 tickers, obviously there's a little bit more, but I'll keep that reserved to my members who should have that list from this week. But yeah, I mean, or even not just this week, but last year. I talked about it plenty of times last year with software stocks that could be a beneficiary or be huge beneficiaries of this AI revolution. All right. Okay. That is it for tonight, guys. I will most likely see you guys on Thursday at the same time at 8 p.m. Pacific Standard Time, or 11 p.m. Eastern Standard Time. And as a quick reminder, before I leave you guys here, make sure you guys watch the most recently uploaded short video that I've uploaded here on this channel. It's going to be very informational. It's regarding the SpaceX IPO that's coming up on June 12th. It's the part 2 of my little mini series on the SPCX or SpaceX's IPO. So please watch it. It's very informational. I believe it's going to be very, very educational as well when regarding financial regulations and rules. So please watch it all the way through from the beginning to the end. I can assure you that it will be very informational and, most importantly, possibly even applicable once SpaceX's IPO is live. All right. Okay. Well, I'll see you guys next time. Check out the links down below, especially that second link where you guys can join and become a Charts Focus 1 member, especially through the CFO Report and the private CFO Discord channel or community, whichever word you guys want to choose. All right, have a great rest of your night, and I'll see you guys on Thursday. Make sure you guys check out that shorts video. Thank you all.